Welcome to Looking at the Markets with David Moadel. Today I'm going to show you something that I think is pretty important for any trader, investor, or anybody who's even just thinking about trading or investing in the markets. Today's title is "This is what an overextended stock market looks like." Good times. Yeah, you ever look at old footage from the roaring 1920s, or you ever look at watch a documentary about that or read about the 1920s, and especially 1929? Yeah, it was must have been an amazing time to be alive. Must have been really great times, lots of fun. It probably seemed like the economy was just going to get better and better, and it probably at that time felt like the stock market was just going to go up and up forever. There was no reason to believe that anything but blue skies would be ahead. But we have the benefit of hindsight now, and with that 2020 hindsight, well, we all know how this ended up. With the good times also came the bad times, and this is a pretty well-known picture. You might have seen it before. It's indicative of what came afterward. A lot of pain in the Great Depression, lasted for a long time, and caused a lot of suffering and misery. And I'm not necessarily saying this is what's going to happen to us, okay? But you have to wonder, is the euphoria that we're feeling in the stock market right now, how long is it going to last? Where is it leading to? Yeah, I'm not telling you to be bearish on the markets right now. I would never try to tell you how to feel or what to do. But these are just things to think about. I mean, a lot of people are in stocks for a particular reason. There's nowhere else to go but stocks. That's if you want to grow your money. I found a really good article today from the Washington Post online version. And here's a quote. "Things are so out of whack in the United States that putting $10,000 into a Vanguard S&P index fund produces more annual income," talking about dividends, "than putting the money into a 10-year treasury security," talking about bonds here. The index fund would produce about $211 a year of dividends, and that's the stock market, according to Vanguard's website. Compare that to bonds. The 10-year treasury would produce about $146, according to data from Thomson Reuters. That's pretty incredible. These times we're living in, putting your money in 10-year treasuries or bonds actually yields lower than the dividends from putting your money into the S&P 500. So bonds are not even really much of a safe haven anymore. You might as well just keep cash if you're going to do that. And plus, with a 10-year treasury, your money is committed for a decade, and you're going to lock in a very low rate. So, this can partially explain, why the market might keep going up. Where else are you going to go? And nowadays, it's not the 1920s. Euphoria or an overextended stock market looks a little different now than it did back in the roaring 20s. It takes on a different form. Euphoria looks different in the digital age, and I collected some of today's comments from the StockTwits message board. People saying things like, "Just keep buying. You can't lose. No down days ever. Get in before you miss it." You hear that a lot, don't you? When the market just keeps going up and up and up. It's FOMO, fear of missing out. That's right, fear can actually drive the markets higher. Sounds crazy, but it's true. Buy, 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 all-time highs every day. It'll never go down. Just keep buying. Yeah, when people, it's one thing for people to say the markets won't go down, but never will go down or can't go down or no down days ever. That's those are signs of a possibly overextended market, in my opinion. And if you pull back the SPY, the spiders, the S&P 500 index chart, you can see, I mean, just take a look. It went up here and then crash, and then went up here, crash, and now it's up here. And it's starting to level off. Yes, it's hitting an all-time high now, but I mean, let me ask you this: if your parents or grandparents or somebody who's close to retirement age asked you, should I put all of my money, my entire nest egg, should I put it into the S&P 500 right here, right now, right here? Would you advise them to do it, knowing that they're wanting to retire soon? Would you advise them to put it all in right here? Hey, maybe the answer is yes, but for me, the answer is no. At least if you're going to put it in, don't just blindly put it in. Don't just shove all your money into the markets and just leave it there, because you want to have a hedge. The point of this whole presentation is not to roll your money up into a mattress and keep it there. It's to make sure that you're hedging somehow, some way, with every trade or investment. Okay, if somebody did express the desire to put their money into the stock market right now, I'd say, okay, how are you hedging? Are you using small position sizes with your trades? Or if you're going to put it all in, are you hedging in some way? And there are a number of ways to do that, and I talk about that in my other videos, and I can advise you on that. But please don't just blindly put all your money in and hope for the best. It's not the way to go, in my opinion. So if you'd like some advisement on how best to protect your money, how to hedge, or if you need more help with anything in the markets, investment, trading, stocks, anything like that, options, I can assist you. Go ahead and feel free to contact me anytime. My email address is davidmoadel@gmail.com. Thanks for listening. I hope to hear from you soon.